Day trading whole numbers, talking about what I think is one of the easiest and most important ideas with day trading, not just small cap crazy runners, but day trading in general. You really need to understand the technical, the emotional, and kind of just the overall game plan when it comes to whole dollar breaks and breakdowns. Talking about it in this video, so well, let's do it. How's it going, guys? Today, I really just want to break down kind of my experience with this whole idea of trading these whole dollars. I know a lot of times I focus on really volatile small cap type stocks, but this can really work for any type of stock, any type of price, a $100 stock, a $200 stock, a $30 stock. It works across the board, and it's a very simple idea to learn and to understand whole dollar breakout, how it works as resistance, how it works as support, and the overall just emotional and technical idea behind the breakout and the breakdown of a whole dollar. Now, when I say whole dollar, I'm talking about $1, $2, $3, $4. You know, you get the idea. First, let's kind of talk about the emotional, the mental side of that. And then we'll also kind of talk about how to play it as a long, how to play it as a short. Remember, day trading is technical analysis, but a lot of it is kind of figuring out the emotion, figuring out kind of where shorts are and where people are buying, where people are selling, and the overall kind of emotion and mental idea behind why you're buying and why you're selling. Now, the other day I traded, I think it was Cali, and I sold right before a whole dollar breakout because I saw the resistance there. Now, I always talk about support and resistance, and the whole dollar resistance support is just kind of a universal thing. It doesn't matter where you've learned to day trade. It doesn't matter what stocks you're trading. It's a very kind of universal rule that a whole dollar a lot of times ends up being resistance, or it can end up being support. People are buying here for this breakout above 350. People are buying here. People are chasing, taking profit there at that whole dollar area because people a lot of times are just worried about buying right at that whole dollar. Now, if we get a break above that whole dollar, what happens? People start to buy because now they're like, hey, it's breaking above the whole dollar. It must mean it wants to go higher. And a lot of times with stocks that are moving fast, that are very volatile, what you're going to get is you're going to get a break over the whole dollar for, 10, 20, 30 cents, depending on how the stock's kind of moving. This stock, great example, it breaks above $4, pops up here to $4.31. So you get a 30-cent pop over that whole dollar. People are waiting for that $4 resistance to break. If I'm a buyer, I'm not going to be buying as this pushes up to that $4 area. Now, let's say it pushes to $4. It gets stuck at $3.99. It pulls back down there to $3.90. On this candle, it pulled down to $3.94. So now it pulls back to $3.94. I see that it's building support there. I might buy a little bit lower than the whole dollar area for that break above. Day trading is supply and demand. If more people are willing to buy than sell, it pushes the price higher. So it's a very simple idea, this emotional battle of supply and demand. You get the FOMO, you get people chasing it. What happens? We get the break over a whole dollar, people chase it, people try to jump in for that next move higher because they see the stock has now broken above that $4 area. So mentally, people are always looking for that breakout right over that whole dollar. And you can also play it two ways here. So you're going to have people who are going to try to short for that breakout if the stock gets really overextended. So this is a perfect example. MDXG pops up there to 430. You can see a lot of selling pressure there. Someone's jumping in there short, hoping that this breaks back down below the whole dollar, loses the support there, and then comes back down to the support, which would have been, right where it kind of touched down there, 375 in this EMA area. When the stock looks really, really strong, but then all of a sudden you have a lot of sellers, a lot of shorts who are sitting right above that whole dollar, knowing that the stock is overextended, that the stock is going higher. It breaks above $4. They know people from here are also going to be taking profit, or are going to be selling into that, creating more supply, creating more selling pressure, and that's what people are doing. They're jumping in there short, knowing that if the stock does break back below $4, it's going to just pull back really quickly, and they're going to be able to get out for, a quick 10, 20 cent gain, kind of scalping that breakdown there. And that's what kind of happens when you have a short attack, when the shorts are all kind of waiting at that key area, knowing the stock is overextended, the news isn't that good. And a lot of times we'll see stocks in the morning, they get those big breakouts, and then boom, they get smacked down because the shorts are normally waiting right at that whole dollar area. It just went from 350 to almost 450, and they know the stock is probably going to pull back. It's not looking that crazy. It's going to pull back, so they jump in there once the stock breaks right above that whole dollar, and they crash it back down. And the emotion, because what happens? People have their stops. People who are buying here at $4, the stock breaks below $4, what happens? They get out because the stock has now pulled below that whole dollar, and they're freaking out because now they're worried. The stock is plummeting. It's dropped below their entry. It's creating more selling pressure, so the shorts are again winning the battle here, and that's why you get this overall move back down here to 375, because creating more supply there, creating more emotional sellers, and just an overall waterfall of selling pressure there. And people are just trying to get out. They're trying to hit the bid. They're trying to get out quickly. And what happens? You get that big crash down. Now, there's a couple of different ways to play these whole dollar breaks in terms of a long entry. Now, let's say I'm looking here at MDXG. I'm looking at the 5-minute chart. I can see the stock is getting overextended. Obviously, this is hindsight now, so it's easier to see. But I can see the stock is pulling away from the support, pulling away from the EMAs. It breaks above $4. Now, what I'm looking for is for this to pull back below $4. Maybe it only pulls down to like $3.90, and that's kind of normally my entry. I'm looking for that quick little pullback, and then I'm looking for the buyers to step back in and then push it back above that whole dollar. And that's normally kind of the entry. Or you can play it the other way. You can buy right as it breaks above that whole dollar, looking for that momentum to carry on. And normally when you get a resistance break, that whole dollar to break there, it's showing that the stock has strength and it wants to push higher. So that's why everybody's kind of jumping in there right at that $4 break, and it's boom, right up there. So you can jump in, 401, but you want to make sure that if you do jump in there quickly, that you're careful that you're not getting just smacked by a bunch of shorts. If it does start to really crash, you got to be careful. You got to get out quickly because the stock could pull back down there to 375, just like it did. So if you're jumping in right at that whole dollar, make sure that you're jumping in there with volume. Make sure you're jumping in with actual price action, not just jumping in because it's just broke. Just because the whole dollar breaks doesn't mean the stock's going to go to the moon. But normally when we have a stock that has a lot of momentum or a lot of action that breaks over a whole dollar, what do we get? We get that big, big move. And it really works for all types of different stocks, not just cheap little $4 or $5 stocks. It'll work for a $30 stock the same exact way. So that's also another really strong indicator. If a stock is pulling back and it turns that previous resistance into support, well, that's normally when we get another big move. So again, look at this. It gets up here to 415. It pulls back down here. Look at the low of this candle, $4. So we had the two EMAs there. You had the VWAP all the way down here, but we had that $4 resistance turn into support, and look what it did. It bounced right back up there from $4 all the way up here to 435. Really confirms to a lot of buyers, to a lot of people who are buying, that this is probably going to go higher. Also, as a short, if it does bounce right there showing support, I'm probably going to cover because I'm worried that this is going to go higher. So looking here at TLRY, kind of same idea. The first 5-minute candle goes from 22.76 up there to 24.91. So that whole dollar, that $25 area turns into resistance because mentally people are like, I'm taking profit. This thing is going crazy. It's getting trouble there at the whole dollar area. So it pulls back. It finally breaks above 25, hits 25.39. So we get the break over $25. Where does it go? 39 cents higher. So if you're able to jump in right at that break over the whole dollar, that $25 area, there's 39 cents of profit. Again, it pulls back down there, kind of turns that $25 area into support. Even with a $25 stock, that whole dollar area is turning into support and resistance. Look at this candle. It pulls back down there $25. Turns that into support. This whole area, support, support, support off that $25 area, and then spikes up there to $26.50. Perfect example. It gets up there to $26 and then pulls back, turns $25 into support. It kind of goes sideways and then breaks above $26. Once it breaks above 26, you get 25 cents there and then 50 cents on that candle. So there's a little bit of action, but you got to be very careful here. You need the volume, you need the overall momentum on your side. You don't want to just be buying a little fake out. But overall, you can see here how these whole dollar support and resistance areas really can affect the price of a stock. Now, why did this stock stop right there at $26? Because shorts are sitting there at that resistance, knowing that longs, that people are going to be buying here on the $25 break and then taking profit for that push up to that $26 resistance. and they're jumping out. So it's adding selling pressure. So you have, again, supply and demand. You get a lot of people buying for the breakout over 25, and then a lot of people selling into that push to 26, and then you have additional shorts adding onto that supply. So you're removing all that demand and you're only adding supply. So I wanted to show you guys that this is not just for penny stocks. This is not just for momentum, volatile stocks. This can really work on any type of stock. No matter what stock you're trading, really focus on those whole dollar breaks that I think really anybody who's learning to day trade, or really anybody who's day trading in general, is playing this same idea. They are thinking about this. They're always looking for that next breakout over the whole dollar. If you can really time it right, if you can get in quickly, get out quickly, you can make a lot of money really just playing these whole dollar breakouts and kind of breakdowns, depending if you're long or short. The whole dollar breakout, one of the easiest and simplest day trading ideas.